everyone and welcome to today's morning report chart analysis videos on Wednesday the 1st of November with me, Richard Perry, market analyst at Hantec Markets. We've got a little bit of dollar strength coming back into this market and that's sort of coming ahead of the Fed. We've got a load of key economic data points and fundamental announcements, political announcements in the next few days. And we're starting off with the Fed today. Now, this afternoon or this evening, the Fed announces monetary policy for November. It's not really, I mean, as much as the Fed would probably try to argue that it is, it's not really a live meeting. And the markets are pretty much nailed on for a December hike. So there's not really a great deal that's going to come out of this Fed meeting. However, what we have got in the next couple of days is the prospect of tax reform bill being announced by the Republicans and also the Fed chair announcement by Donald Trump, both of which are actually likely to now come on tomorrow. The tax reform bill could have been today, but apparently the Republicans have sort of pushed it back by 24 hours. And subsequently it's going to be tomorrow instead. But what we are seeing at the moment is dollar strength. And that dollar strength is starting to come back into the market as treasury yields have picked up. We had some strong US data out yesterday, which certainly on the consumer confidence side, massive highs on that consumer confidence, helping to sort of pull the dollar higher once more, and a rebound move that has seen treasury yields higher. Now this is an interesting one because what we are seeing is the dollar strength. You can see that the euro is slightly lower, the yen is slightly weaker, and also the commodity currencies as well, or certainly the Canadian dollar and Swiss franc. However, the key move, I think, today is, or the odd move, I should say, is gold. Gold is trading higher, and silver. Now, I do not think that these rebounds on gold and silver are going to be the turnaround play. I think this is an odd move in the market, and I'm very surprised that it's taking hold. And I'm going to sort of talk you through those charts in a bit on my analysis videos. But these are two prices that we need to keep an eye on. But generally speaking, in front of all these key economic releases, and also you've got PMIs today, you've got the ISM manufacturing data before the Fed tonight as well. So you've got a load of data coming out in the next few days, and announcements that could well be outlook defining for the dollar. And in front of that, the dollar started to find a bit of support. So it is interesting that the moves that we are seeing, certainly on gold anyway. In terms of equity markets, we had a bit of a stalling yesterday, a bit of slight gains, but again, Wall Street continues to sort of consolidate to an extent in the last few days, and that has not really been sort of seen in the European session, which has started pretty positively. The UK Manufacturing Pmi came out earlier and beat expectations at 56.3, and that jumped sterling higher by around about 20 pips, and it has pulled back FTSE 100. So that negative correlation play between FTSE and sterling continues. But generally speaking, we are pretty positive on equity markets. The DAX playing catch up on yesterday, having been on public holiday for Reformation Day. So apart from the Fed, let's look at the rest of the data, because we've got ADP employment today expected to be 200,000. Now, I wouldn't read anything really into this ADP employment number. We had a lower than expected ADP last month, but that didn't give you any read through pretty much whatsoever for the non-farm payrolls data on Friday, and 200,000 is well under the payrolls expectation of sort of 315. So I don't know how much the market's going to look at that, but you've got the ISM manufacturing at 2 o'clock today. 59.5 is the expectation there, still pretty strong. And then the weekly crude oil stocks, weekly oil stocks on the crude minus 2.5 million barrels. Drawdown of 215 on the distillates, and drawdown of 1.6 on gasoline. So my chart today is silver. Now, I was talking about silver and gold rallying. When I was looking at silver yesterday, I was sort of looking at this downtrend being intact over the past sort of 2 weeks. And it looked as though that downtrend was continuing. It had a rebound earlier this morning that has sort of come back to this pivot. Now, the pivot at 1690 is interesting, I think, on this chart, because it has tended to act as a turning point in the last few months. So 1690 on a closing basis, I think you would say is a turning point. Now, the fact that we've been trading under 1690 throughout this week and failing, sort of led me to believe that 1690 was a key pivot, and I still think it is a key pivot into the close. And you haven't obviously yet seen a close yet today, but I think this market is still looking corrective, and I think there is still the prospect of pressure to the downside. And as I said, with the rising with the rising move on the dollar, you've got treasury yields that are high. You've also got the yen, which is weaker. So all these are sort of factors playing into precious metals that I'm not a massive fan of, really. However, today you have seen silver higher, but I don't necessarily think it's a sustainable move higher, and I'd be very surprised if silver starts to sort of move strongly through 17 figure and then 17.14, which is that reaction high from the 23rd, 24th. So you have seen a bounce on silver today. I don't necessarily think it's going to be sustainable, and I think it's going to be rolling over in due course. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.